All right, we ready? All right. So as we've been doing this for a couple of days now, we will are recording this obviously, and we'll post this up to the Briefing and Play Trader site shortly. But what we're looking at is companies that have already reported earnings for the Q4 earnings season here, and taking a look around at the results and also some of the price action that we've seen since they posted their numbers, looking for patterns that are playing out and trying to discern, broader market activity off of it too. So we have gotten up so far. We got through the month of January, and we were up to January 26th. And there's a few names of interest that morning, and we're going to try to get us caught up through to February 4th or 5th this morning, and get all the names that I've covered. Now, if you're following along, what you're looking to do here is take a look under the event ticker, EVENT, and you can see each morning I cover a list of earnings and provide a little bit of color around them. So that is exactly what we're going to be going off of, using this as our primary focus. If there's any other names out there, feel free to write in feedback. We'd be happy to answer them. And once we close up this segment, we are going to go around and answer a bunch of the feedback questions that we've gotten, and taking a look ahead at next week's earnings and some of the other bigger stories. But for now, taking a look at January 26th, the morning of, we had a pretty busy morning that day, and Steel Dynamics was one of the plays that we were looking at, Scott. At the time, this was trading just above its 50-day moving average, which was sitting right around 37.87, where it is right now, too. Broke down on the earnings reports. Wasn't really anything particularly discouraging about it. The one thing that I did take from it was another comment about end user inventories that were extremely low. And, that's kind of a theme that I've seen play out here, which I think bodes well. And we talked a lot about this. We talked a lot about this in the Sentiment and Flow show, and the pickup for escape velocity potentially in the second half of the year. Steel Dynamics certainly held on to that theory. Now the stock fell down to 35. It's holding support. Now we see it coming back up, and it's basically about even from where it was when it reported, Scott, testing that 50-day moving average. And this is going to be a common theme I think we're going to talk about in regards to this chart action. What's your thoughts on this? And we'll try to avoid sounding like a broken record, but we'll kind of go through and maybe break down some of the differences we're seeing in a couple of these, testing the 50-day moving average for either support or resistance.
Yeah, so like you said, it was a really strong stock the last couple of months. Had a pretty disruptive move late January, and then we had a bounce off there. So it's testing resistance right around the 50-day moving average in that 38 area. That's a key spot right there. Broken down trend line coming back to stop at resistance. This stock has something to prove. I wouldn't really be a buyer here at this level. It would have to continue to make some progress back up towards 40 to maybe get me interested right now in the short term. But otherwise, it seems like it's just going to be chopping around, struggling underneath that $38 area around the 50-day moving average. If it breaks below 34, and you see other steel stocks also selling off, or the ETF SLX, I think you could possibly get a drop back down to the 50-day moving average, which is actually, I'm sorry, the 200-day moving average, which would be that green line around 31.
Okay, real quick, just to nip this in the bud in case anybody's seen it. We're seeing the headlines that the House passed the Senate bill on the Biden stimulus plan. These are all procedural votes, just so you know. There's still a lot that has to go on before anything's passed, but at least it is progressing through Capitol Hill. So don't get too excited about that headline. It is really just a procedural vote. All right, Scott, next up we have 3M, which you really posted some nice numbers here. I think probably caught some people by surprise. 3M's usually not a big beat company, but they were able to post some impressive organic revenue growth of about 5.5%. The expectations were around 3%. Inline guidance, that's probably a little bit more typical of 3M, but we did see a nice reaction to the name. Now, you're one that usually likes to short this name because it's usually tumbling in reaction to earnings. It did roll over here, but probably probably a little bit of a different thought process, and now we're seeing some support at that 175 area.
Yeah, I mean, in my defense too, I mean, look at this monthly chart, and this is why I've shorted over the last couple of years, is the fact that it peaked out back in 2018, and it's been in a multi-month downtrend, a multi-year downtrend for the last 3 years. So I've just got accustomed to shorting the response to earnings, and yeah, I've capitalized on some nice trades on the short side over the last 3 years. This year, that we're looking at a breakout above resistance, so it's not ideal for me to short. I prefer to, monitor on this pullback that it's doing right here around the 20-day, 50-day moving average. The prior resistance becoming new support around this 174, 175 area, and you look at it this way and you say, okay, should I be a buyer? Is it going to continue to the upside, or is it just going to continue to chop around and struggle? So for me, this is kind of a no man's land chart right now, and there's better looking things to trade. So I'm watching it because it's 3M, but it's not really and doesn't really look enticing for me to get involved.
All right. Next up, then we got American Express AXP, making a pretty nice move here following earnings. Hold on a second, sorry. Following the earnings, it was down around that 114 area. Company came out beating by 46 cents. Revenues basically in line. Obviously, the companies continued to be hit by the lack of business travel. Corporate was certainly a big part of their day-to-day. So they are managing to get by, and of course the pressure from some of the fintech names. We've talked a lot about that. But this is another one that fit into that rolling over in the middle of January, now finding support and working its way back. This one's a little bit more advanced than some of the other charts that we've seen here, Scott. Mm-hmm. That break above the 50 yesterday was certainly important. Now we're seeing it kind of consolidate these gains here. So what are you thinking with AXP?
Yeah, it's pretty sloppy. Now, if you look back on the charts where the February breakdown occurred in the market, that gap resistance around 130 is still in play. So that's a little bit of a wall up there, or headwind at that 130 mark. So it needs to get above that if it wants to, start moving into new high territory back near 140. Overall, it just looks like it's going to chop around here. You do have a nice rising 50-day moving average, so any pullback is probably going to be bought up above the 110, 115 area. If it starts to crack underneath the November gap, that bullish gap from around 110, that's probably going to bring the 200-day moving average into play. As it's right now, it's 104, but I assume if AXP, by the time it does get back down to that level, it would probably the 200-day moving average would be calculated differently to rise up to meet price. So just keep watching that key support level around the 200 and the gap around 110, 105.
All right, then we got a home builder. Scott was just outlining the strength for it, and I had mentioned this one as my favorite play in it, and that's DHI. It doesn't take a rocket science, Scott, to figure out that 80 is the key area for this one.
Yeah, I agree. As I said, I don't like to play the individual names because they all seem alike to me. They all just basically are building new homes everywhere. But the ITB, we've mentioned this a few times, has been phenomenal over the course of the last year. Underwent some sort of sideways range the last 3 to 4 months, and has been breaking out here in late January, pulled back, and starting to resume back to the upside. Same story with the XHB, really strong performer there. So if you want to go a little deeper, I'll take Gavin's word for it that DHI is one of the better ones that are out there. Technically, right now, I think Lennar seems to be pacing the way to the breakout today.
All right. And then we have Freeport-McMoRan FCX. Looks great. Should have brought it on that bounce, that roll over to the 50. Coming up to that resistance level that it bounced into, going into just ahead of this earnings report when it started rolling over. So key test coming from FCX. But why I had my alert set for that to buy it on the 50 test, Scott, and let that one slip through.
Yeah, if this thing turns into a sloppy range over the next few weeks, definitely keep the 50-day moving average or the 26, 25 area as an opportunity to buy. I know you were loving this stock back in the single digits or teens, Gav, like back in the spring. really massive turnaround, and I think I was highlighting it too. If we take a look at this monthly chart of FCX here, you can see that one of the reasons why I started liking it was just this broken down trend line from almost a decade long off the 2011 highs, just really got ripping to the upside there at over $14, and it really hasn't looked back. So it looks pretty darn good overall. Probably, you could easily make the case that it's short-term overbought for the last few months. That's why I would say basically don't chase it and wait for those pullbacks to key levels.
Yeah, and I think you'd be a little remiss if you're looking at FCX. You got to keep an eye out on the copper chart too. You got a continuous for the copper futures, Scott?
I think COPX is the one I usually look at.
It's okay.
Those
Yeah,
are more copper miners.
you got you don't have the HG future
I
symbol?
don't. I don't. Not
Okay.
on this software. I have it on
Yeah.
a different website. Um, there's,
That's fine. But I would just say with FCX, you got to keep an eye out on Dr. Copper, of course.
yeah.
And that looks great, in my opinion. Copper rallied above 350 back in December, and since then it's just been going in a sideways direction between 350 to 370. And Scott, we always talk about how charts like that, as long as they're consolidating their gains and holding them, and don't forget, this is after our run it was down at $2.20 back in April. So copper looks fantastic here. You look at it on the monthly,
hmm
weekly. As long as it consolidates these gains, it's good for FCX, which is also seeing more production from its Grasberg mine.
Yeah, JJC is the other. I think that's one. This one more tracks the copper futures better. It's very illiquid. It's an ETN, but I think it's somewhat the closest thing if you don't have access to copper futures. Um, Gav, just so you called it Dr. Copper, so why don't you just explain quickly to everyone why that is and why it's so important for economic cycles and whatnot.
Yeah, I mean, it's just viewed as one of the primary metals that is used for a lot of production of materials, be it semiconductor space or piping for new homes, whatever it might be. And a lot of people just use that as a key read on the overall global economy. So when you see strength in copper, then that's a good sign for the global economy. And we certainly saw that picking up after the drop-offs in at the beginning of the year. And if copper's on the rise, then you obviously want to be looking at the miners because all of a sudden it becomes economically more feasible for them to mine that
hmm
the metal out of the ground. So
hmm
FCX, I don't know what the correlation is off the top of my head, but one would assume it's got to be in the zero point 0.8 area with regards to copper prices, I would think.
Yeah, and one of the
And they also have golds and some oil and energy too, but their primary driver is copper.
yeah, they're copper, gold, and a little bit of energy. I agree for Freeport. One of the ETFs out there that I like to track for the metal mining group is the XME. So another good if
Yeah.
ETF out there that tracks a whole bunch of those miners in that group. I think it includes some steel stocks, some gold stocks, gold miners, some copper miners. FCX is in there as well. It's a nice ETF.
Yep. Okay, moving along here, we got General Electric, GE, another one that's basically consolidating recent gains. We were along this from the six area. Really strong earnings report, particularly on the free cash flow side. So I continue to like this, and I'm perfectly fine with this sideways consolidation pattern that we're seeing.
Yeah, I would just say the same thing, Gav. I'm not as big on this one technically. I think it's just been a horrible stock for 20 plus years, even more so the last few years. I mean, I know a lot of you guys got involved in it in the single digit area as buying it for a long term ticket, so a long term investment. So it is working out great for you guys. It's just, it's still in a downtrend. It just seems so out of favor. I would really need to see it just kind of create some sort of new uptrend somehow, and it just doesn't seem to be able to do it. So choppy sideways. At the very least, I mean, it is stabilizing and it is sideways. So that's the start of a potential good sign for the stock. Maybe I'll consider it if it ever comes back into the 200-day moving average.
All right, and we got J&J. They are putting in for their emergency authorization. Their emergency authorization usage here for their vaccine. Holding steady in my long on this one too, Scott. Not the most exciting name, but pretty good round of results and should continue to get a tailwind from that vaccine.
Yeah, I concur. It's hanging in there. It looks pretty good above 155.
All right, Lockheed Martin up next. We talked a little bit about some of the turnarounds in these aerospace and defense names. I'm still long that DFEN, which is a three-time bull. Thoughts as this creeps above its 20-day moving average?
I'm swing long this one from earlier in the week around 322 to try to play a counter trend bounce in it. We did really well in it. We had about an 18-point gain. Just sitting with a very small balance at this point because it is in this big multi-month downtrend line, trading below the 200, the 50-day, the 20-day moving averages. So a little bit of a concern there. Although if I look over to the ITA, that has been faring well. It's back up around December and January highs. The PPA also looking pretty good, as is the XAR. These ETFs are all much stronger thanks to breakouts or recovery efforts in Boeing. General Dynamics is also another one that looks pretty good here, breaking out. So the group is starting to turn around a little bit. Back to LMT, there's some definite headwinds that this stock has to battle through here. But because the group in the sector is acting strong, I'm willing to, sit with it a little longer and give it the benefit of the doubt that it may continue higher.
All right. And another aerospace and defense thing was out that morning, Raytheon RTX. Some headline coming across too, U.S. State Department approving the potential sale of a Standard Missile 2 block. Ilya Missile 2 Chile. This is according to sources at the Pentagon. So RTX moving back above its 50, coming up. That 74 resistance will be a key one, Scott.
I agree. I would even say let's go 75. That's the June high, as well as the November, December highs. So 75 looks like the key line in the sand for this stock to really get moving back to the upside. Support-wise, it does look like it's pretty good above the 50-day moving average and the gap from November. So you have some pretty good opportunities to buy some weakness, maybe around $62 to $65 if it does pull back in.
All right, Verizon, weak looking chart, but we are seeing that 54 level that I was pointing out a few days ago come into play here, holding up at the moment. So still remain long. Verizon collected a nice dividend on it at 4.30%. Any thoughts on VZ? I thought I heard you talking about it before. You didn't go short it though, did you?
No, why would I ever do that?
I thought I heard you.
I mentioned it's
cautious on it.
No. I mentioned it how it was down 13% off the December highs, and it showed up on a couple of the scans there as oversold. That if you were interested in picking it up as a long-term play for the dividend, this is a good place to start accumulating. This 54 to 53 zone would look like a nice little area. Again, Verizon seems way more of a long-term, accumulation stock for the dividend than anything else. I don't short this stock. Plus, I'm a customer, Gav. You know my rule. When I'm a customer and I use a service, I prefer to own those stocks, get that dividend. Makes a one monthly payment for me a year. So, yeah, I wouldn't short Verizon.
All right, I'll take out my Reddit post to squeeze you then. ROK, Rockwell Automation, one of the better robotic plays that out there. Now the chart looks a little shakier. It is slipped below its 50. I think the problem with robotic plays is everybody kind of expects it to have Zoom type reports, and this is a slow burn trend. This isn't just the pandemic hit and everybody's jumping in. So the results don't have like the same excitement that you'll see in some like a Pinterest or something. But nice steady action here. But the chart does look admittedly a little weak. Coming into some support though at 230.
Yeah, 240 right now, Gav. But if it does sink down, yeah, you do have the 200-day moving average around 230. You're right. I like that area. If it does get a little lower, a little concern sliding up below the 50-day moving average for sure. Broken downtrends, broken support. Yeah, we'll keep it on the radar.
All right. And that evening we got AMD out that night, and they, of course, were seeing a little bit of selling pressure following their earnings report. It was fine. I think that some people were under a little concerned that perhaps Intel was getting back into the scene. This was right around their big blowout quarter, and of course, the change at the top for Intel. But AMD steadied itself, holding right around this 85 level, and as long as it does that, I'm okay. But I would like to see it crawling back above that 50-day moving average at 91, Scott.
Yeah, I agree. I agree. It seems like everyone wants to own this stock, but it just doesn't seem to be getting moving to the upside. I think everyone's thinks it's going to head up towards 100. I know I traded multiple times the last few months, just off the technicals back above the 20 and the 50-day moving averages. I got a little bit of gains out of it, but I just seem to be constantly disappointed in the lack of follow through to the upside as it starts to move higher. It seems like it always just slams back down. It is holding in around this 85 support area, which looks like the current line in the sand. If it cannot hold 85 going forward, it could get a little nasty, and maybe you got to move down to the November bullish gap zone, which would meet the 200-day moving average, which is on the rise right now at 75 at this key support level, going back to Q4 of last year. So, yeah, I'm a little cautious on this one. It's been a laggard in the semiconductor space for sure.
All right, a name that I was looking to see it test 100 and hold, and it certainly did. Starbucks. Results weren't the greatest for the name. A couple of misses there as they were caught up in the pandemic, picking back up around the holidays. And but this is one of the best consumer stocks that you're going to see out there. I said that if it tested 100, I'd be a buyer in the weakness, and anybody who did that would be rewarded with a little bit of a 7% move back up here, coming back up though towards key resistance. So we'll have to watch to see how this plays out. Could set up maybe for a little bit of a sideways trading direction, given the fact that the results weren't blowout. But I mean, as good of a consumer name as you're going to see out there.
Yeah, I think if you're long term this one, I think you're sitting pretty right now. Some pretty good action overall. Like you said, a really strong recovery back above the 50-day moving average, and the fastest stocks recover back above the 50-day moving average, usually the better off that they are. So it just looks great. It's trading up here. I believe this is all-time highs. Let me just take a look. Yeah, it's at all-time highs on this monthly chart, and I'd say overall, you can even go back to the highs from a few years ago in 2019, above 95. It's just this bullish vibe. It just exists. So expect it to continue to go higher.
All right. Capital One was out that afternoon too. Very similar action here for Capital One, where we saw a little bit of a hiccup, come back down to 102, but now pressing back up towards its all-time highs at 114. Results were pretty good. They had a huge $2.52 beat on the bottom line. The revenues were down as, again, just kind of impacted by the increase in fintech and the lack of business spend too. But they were well above expectations there. And they authorized a $7.5 billion share buyback program. So for me, the buyback program was kind of the bigger item. And we're definitely seeing people pick this one up, but coming into a little bit of resistance again. Very similar to Starbucks, this chart.
Yes, new highs, all-time new highs, it looks like. Breaking out over that $100 area recently, pulled back, bounced off it. So it's got a little range going on there between 100 and 115. Rising 50-day moving average, rising trends, rising support. It looks pretty good. I'd say I like this name above $100.
All right. Another one that was seeing some sell the news reaction to earnings, that was Texas Instruments. But yet another one that held on to that 50-day now, pressing back up towards key resistance. You're kind of getting the theme, I'm sure, here as we go through these names. A lot of companies pressing back up through resistance. And I get the feeling, and this will be one of the topics that I'm discussing, Scott, for the trader strategy meeting on Tuesday, that we will see the markets break higher, and it'll be the rising tide lifts all boats type things with a lot of these charts.
Yeah, Texas Instruments, definitely one of the more stronger semiconductor names that are out there as of the last couple months. There's just no denying the trend there. Like you said, it's rising 50-day moving average. It's probed it a few times on some pullbacks, and it bounces right off of it. So that is a very strong, simple, technical looking pattern that you just keep riding until things change. And yeah, I concur, Gav. There's a lot of bullishness going on there. I mean, even if we're not talking about the big, large cap names in the S&P, there's so many mid caps and small caps every single day that I see on my breakout scans that are continuously pushing higher here. That some people might say it's becoming too frothy of a market when everything's going higher, because even the companies that have very poor fundamentals. The problem is that what inning are we in? Are we just past the seventh inning stretch? Because
I
this
feel
can
like
go.
we're in inning 18.
That's a possibility, maybe it's overtime, but again, that could just keep going on and on and on. So, uh, I can tell you this much, it's going to continue much longer than everybody thinks. If everyone's looking for the
Yeah.
top and everyone thinks that this is the top and it's too frothy, well, it's not going to be the top and it's not too frothy. It's gonna somehow mess with that theory. It's not until everyone becomes euphoric. Now, maybe the newbies and the younger generations that we've seen recently, getting involved in the market here over the last year because of COVID and whatnot, people have had more of an interest. Now, that's a whole different ballgame. If they're the ones that are showing the exuberance and the euphoria, and we're the considered to be the older school people who have been doing this for over 20 years, then maybe we are in late innings then. It's a little
Yeah.
tough to decide that again because obviously there's too many moving parts and too many players. But just be conscious of that, going forward. But I am in that bull camp overall.
Yep. Okay. Microsoft. I just think that this is a buy. I'm just going to keep that nice and easy. What do you think, Scott?
Yeah, it's a buy. I mean, they do everything. They got their hand dipped in everything. Whether you like Bill Gates or not or whatever, look at the stock. This is the daily time frame. Let's just look at a monthly.
Bill Gates. What was it? 2004?
I don't know. Is he not involved in that anymore? I don't even know.
Nah, he's seen control a long time ago.
Oh, okay. I guess it goes to show you my age again. So, no, the stock has gone absolutely parabolic the last like 10 years. Um, it's still going up. So, they keep cranking out the Xboxes, and they were a huge beneficiary of the COVID pandemic with their Skype and Teams or whatever else they do. They got their hands in a lot of different areas. It's one of the top companies right next to Apple and Amazon. So
Yeah. All right. Next up, we got Boeing, ticker symbol BA. Obviously, falling into that aerospace and defense pattern that we talked about, where it's trying to
mhm.
break that downward pattern that was in place from early December and get back above its 50.
Yeah, bigger picture, it still has a lot of struggles to battle through. But obviously, the more it consolidates and goes sideways and stays choppy, that could be, a changing of longs versus shorts, a changing of opinions. Uh, on this daily time frame here, it is below the 50-day moving average. It is below those January resistance levels around 214, 215. So that's going to be your short-term line in the sand. Maybe it's turning a corner because it did break that 2-month downtrend line, but it still has to get above 215 to really get the momentum moving back to the upside. A little cautious on it right now. Good support though down below 200 in that 190 area.
All right, Abbott Labs, ABT. Stocks looks great in my
hmm
opinion. It's
hmm
holding above that 120. Another one trying to break out here, Scott.
Yeah, this one I've loved for years. Again, if you look at a long-term monthly chart, the stock has just basically been in a straight up 45-degree angle. It just keeps climbing, basing, breaking out, basing, breaking out, basing, breaking out, and that's just a sign of a really strong company. So I like this name overall.
All right, next up, Corning GLW. At the time, I noted that it was likely coming in for a test of it's 50 and broke below that, but it held 35 pretty firmly. Another one that, in my opinion, is real simple. I'd be a buyer. Uh,
I
Plastics are going to be really strong. You
Not just
disagree?
plastics, glass too.
Yeah.
Remember, they do a lot of different things, and they're in a lot of different industries across the board there. So I think I gotta go check back. This was on my list of stocks that I was going to add to my long-term portfolio.
Yeah.
Yield is about 2.5%. It's a slow mover. It's for the income portfolio sort of vibe. Um, it's a slow mover. You don't have to worry about too much, volatility going on it. What I really liked about it is that it was breaking out to multi-year highs, as I show here in this monthly chart, just recently. This is about a 20-year high for GLW. I don't expect it to go, gangbusters to the upside, like it did back in the late 90s, but I do think that it's worthy of owning at these levels to hopefully make some steady uh, progress over the next couple of years.
All right, next up, General Dynamics. We talked about this one back at the time that it had a better chart than most of its peers, and it
Hmm.
seems to be getting rewarded here with the breakout above 155. So I'm in the defend, but if I was to pick one name from it based around technicals, I'd probably be GD.
Yeah, it's not a bad one. It has been struggling, as most of them have been for the last 2 or 3 years. GD is no exception. You can see that downtrend off the 2018 highs has been, keeping the stock from, getting higher. But this is pretty good consolidation pattern here. It is back at this key resistance level around 160, and that if you look at the daily time frame now, it just basically is breaking out of some consolidation ranges and trying to make its way higher. So there's a lot of potential for this one. It's at this key inflection point around 160 that can either reject it or the stock just starts climbing way back up to the upside, back towards 200. We'll see how that plays out. But right now the group is turning a little bit of a corner. Could be, one sector to watch over coming months for sure.
Yep. Next up, we got NSC, um, Norfolk Southern, a rail play. Trending along 235, move back above its 50-day moving average here. Looks okay, a little bit of a sideways trading range going on in some of these transports, which I'm fine with, Scott, because they seem to have arrested their decline, which I expect that to continue. I'll be seeing my one contact in the trucking industry over the weekend, so I'm curious to hear from him. But everything that I've heard is they've got a lot of pricing power. They've got
Hmm.
plenty of demand out there, and the fundamentals are great. So I'm sticking to my guns on the IYT, despite some of the weaker action that we saw about a week and a half ago.
Yeah, big. Always look at the bigger picture when you want to talk cycles and stuff. So Norfolk Southern NSC has been, just recently at all-time new highs and in a multi-year uptrend. Obviously, it got hit there with COVID, as most stocks did, but the recovery effort was quick and it's back to new highs again. So bigger picture, definitely a really strong move to the upside, which means on a weekly or a daily time frame, any sort of mild pullback of about 10, 15% pretty much keeps us an opportunity to buy in weakness.
All right, then we got Brinker, ticker symbol EAT, Chili's and Maggiano's, of course. I'm pretty impressed to see this one holding up as well as it is. I mean, the results were fine, but nice ascending triangle here going on in each over the last couple of months, right, Scott?
Yeah, I'm surprised too. You think these restaurant stocks would have struggled a little bit longer with the slow recovery with the pandemic and whatnot. They were really, took a major hit back in March of last year. But to see it come back and trade at all-time highs above the 2015 highs, that's impressive. So that's it. I mean, it's really, really strong right now. Looks good above the 50-day moving averages around 57.
All right, and then we got Apple, which is another one that saw some sell the news here. Um, you know, I'm long Apple, and I don't see any reason to get cute and try to short it at all or anything. Um, can you make a counter argument from the charts on that,
Uh,
Scott? Or
yeah, I could. I mean, it looks like it's slowing down a little bit, but again, I'd have to look at the different patterns. So you can make the case that there was a false breakout in late January that kind of just stopped the momentum, put the brakes on everything. But this uptrend is still intact here from the last few months. So I don't tend to argue against uptrends above a rising 20-day, rising 50-day moving average, right above prior monthly lows as well. So the stock looks okay, still above 125, 127 area. But if you really, you could pretty much you get bullish, bearish case for anything. The weekly time frame does have that gap up reversal sort of look, so it's a dark cloud cover in a candlestick pattern. That again, it's bearish right now, but as with most patterns in technical analysis, you need confirmation and follow through, and that's why I wouldn't be too bearish unless we start to see Apple break below 130 on this weekly chart, and then even then it would come into that 125 support area that we mentioned. So maybe it pulls back a little bit. As for the monthly time frame, you do have a little bit more of an obvious candle reversal off the highs above 140. Again, putting a little bit of a damper on the strong momentum that was there at that time. So it's possible the stock is going to just kind of, go sideways here over the next few months, bigger picture wise. But definitely something going on up here above 140 that's going to keep it from, pushing higher for a couple of weeks, it looks like.
All right. Tesla saw a brief bout of selling after its results. The results were pretty strong. There was an EPS miss that was really due more to share-based compensation, blew out free cash flow expectations. But it's bouncing right back. It dipped down to that 800 level, and it's back at 850. You got any worries on it?
Consolidation near all-time highs between 800 and 900. So the longer it stays up here between those levels and creates a little bit of a range, the more likely it's going to probably break out to the upside, is my guess, and become $1,000 stock. So strong multi-month uptrends, strong weekly uptrends, trading above all the key moving averages, just starting a basing sideways pattern. So looks pretty good to me.
All right. We also had Facebook out that day. Basically a sideways trading range here. Dropped. It did bounce up to 260 level following earnings, but hasn't been able to reclaim that 50-day.
Yeah, very choppy action over the last couple of months, to say the least. It's been, like you said, below the 50-day moving average, rejected a few times at it, bounced off the 200 in January, and key support, so that you do have some sort of support from prior months in the gap in that 245, 250 vicinity. That would be your line in the sand going forward. But it needs to do something. It needs to get away from this multi-month chop. Has to start breaking out over 290 and head towards 300 if it's going to do anything. Otherwise, it's just in the middle of the road here. Nothing going on.
All right. Next up, cloud software named ServiceNow, NOW. Posted some pretty good results, which allowed the company to hold the 510 area. And at the time, I thought that was really the important aspect of it. And then once it held, we just saw it really start moving higher here. And it's been a pretty big winner since reporting those earnings.
Yeah, really strong multi-year uptrend, all-time highs. Bouncing off the 50-day rising 50-day moving average multiple occasions, dip below it, quick reversal, which is always a good sign. It's super strong. It looks great. I like it above 500 going forward. I know you got some wiggle room there, but if it does come back in, I'd be looking to be a buyer on dips, to the 50-day, give or take.
All right. Then we had Teradyne that afternoon. This was another one of those big tech beats that just saw that selling pressure follow. At the time, I said that we could see it dip down to that 120 area. It got down a little bit below that. Now it's moving back up, trying to fill that gap up. The company also announced a share repurchase at the time. So, nice buy the dip opportunity here, just has to continue and fill above 130 to feel a little bit more confident in it.
Yeah, I agree. You do have that gap right there that's putting a damper on the momentum as a whole. Key support definitely around the December and January lows in that 111 area, give or take. but strong, definitely a strong name in the semiconductor space over the course of the last few months, helping it lead to the upside. So, uh, definitely a name to keep on the radar there. I like it.
All right, we got Whirlpool, WHR. Yet another sell the news reaction. That was basically the flavor that we were seeing over the course of earnings for that first week and a half. Coming in to test the 200 psych level, it fell below that, and we got down to about 185, bouncing back here, but a little bit of a sloppy chart here, in my opinion.
Yeah.
Scott, what do you think?
Yeah, I agree. I agree. 4 months of sideways action, 50-day moving averages going sideways, couple false breakouts to the downside and the upside. Bigger pick. Usually, when you get that, you got to always look at the higher time frames. So let's take a look at the weekly. It just kind of confirms the choppy action in the last couple of months, but it is in context of a rising recovery effort above resistance level. So it looks good above 170-ish overall. And if you really want to take a bigger picture look, we go to the monthly time frame. It is back around multi-year highs. 200 seems to be somewhat of a resistance for it in the bigger picture of things. So be interesting if it can ever get back up there and close and push into higher ground. But overall, short term, above 180 looks pretty good. And then I would say the line in the sand for anybody that's in it long term is 160.
All right, and moving on to the 28th there, we had American Airlines out, 30% short interest, so I think it got caught up. The reaction to the earnings, that was right around the GameStop frenzy too, so it's a little tougher to read what the initial thought was, but after seeing that pop up to 21 post-earnings, it has slipped back to that 17 level. But you said you kind of like airlines here, Scott.
I did a little earlier. They seem to be turning a little bit of a corner. They're not my favorite group to trade, like I mentioned before. Housing doesn't seem to be my favorite. The airlines tend to, I trade them maybe 2 or 3 times a year. They're shaping up okay. Hey, look at the Jets ETF here. We had some breakouts in Spirit Airlines going on here this week in response to earnings. I believe Hawaiian Airlines is trying to break out here. A couple other ones. I think LUV had a good report today, breaking out. So the group is starting to perk up from this 2-month chop. I would probably, if I really wanted to, put my money in just the Jets because they're all pretty much all these airlines are the same to me.
Does Jets pay a dividend?
That's a good question. I don't think it does. Do any of these airlines pay dividends?
I don't think any of them can pay dividends.
Yeah, exactly. Yeah. No, it
They're
doesn't.
taking money from the government. I'm pretty sure there's a lockdown on capital returns.
Yeah, so Jets does not either. So yeah, so that's why the group looks good, but I don't know if I'm going to trade it.
All right. MasterCard, trading in a sideways direction here. We've talked a lot about the fintech competition coming into play here. And certainly seems like people are a little cautious on owning these credit cards, but it is holding back above its 50-day moving average at the moment.
It is. It actually bounced off beautifully off that level from last week. Holding that 320, 315.
Well, I got it bouncing off the 200.
Oh, I'm sorry.
Last week.
You know what? My bad. You could,
Right?
yeah. I'm sorry. That's 200.
Yeah.
I keep mixing that up there.
But it did squeeze above the 50 yesterday, and it's holding above it so far.
That's correct. Yes, but it's still choppy action the last couple of months. But as I said, when you get this kind of sloppy looking patterns here, it's always helpful to just kind of go out to a weekly time frame, get your bearings, and then maybe even a monthly, and see how this is behaving. And yeah, it's definitely slowing down here. It's got some work to do, maybe a little longer until it can break out over 360 again. Short term, I would just kind of watch these 2-3 month lows in this 315 area. But overall, big picture uptrend. So yeah, it just needs to do something. It's just trapped in these ranges right now.
All right, little McDonald's MCD holding its 200-day moving average pretty nicely, Scott. I kind of like the look of this chart as long as it could stay above that 200. Seems to be a lot of concern around it the last couple of months, really. I bet you they're kicking themselves for rolling out Chipotle, that's for sure.
Yeah.
But I don't know. I kind of like a chart that looks like this myself.
Okay.
I think it's going to continue to test this 200. We're going to see that 200 and the 50 converge, and that's really going to be the big line in the sand for McDonald's. But I don't know. What's your thoughts on it?
That's it. I mean, when you get those two moving averages converging, it tells you price action is narrowing in a tight
Sure.
range, and something's going to eventually break out. So if the upside breakout is over 215-ish, you could maybe get a whole new leg up to the upside there. If it breaks down below the 200-day moving average and then starts collapsing underneath the Psych 200 level, it's probably going to have some issues. Usually, that scenario, you probably have other groups in this other restaurant stocks also breaking down. You might even have the market breaking down at that point. But yeah, it's setting up to do something. It's definitely narrowing in range and is due to do something soon. Keep it on the radar.
Right. Next up, we've highlighted this one as our favorite, one of our favorite airline plays, in particular, LUV, Southwest.
Yeah, I think they're breaking out today, right?
Breaking out, yeah. Yeah.
But that's after earnings? Do we catch up?
No, this is earnings were about a week ago. So their initial reaction to earnings was they were trading just below the 50-day. They had broken below it pre-earnings. Then they saw a little bit of a dip post-earnings there till 42. But since then, stock's just been pressing higher and now coming up to that 50 psych and looks really good here on a possible breakout.
Yeah, it's definitely it's right up there with Spirit Airlines and Hawaiian Airlines. I would put Southwest, Save, and HA all in the same boat there. Yeah.
I like Delta too. Now, the other three, I think one of the big drivers for them is purely domestic focus. And I think, for another year or so, people are still expecting international travel to be relatively non-existent.
Well, that makes sense. Okay.
Yeah. ST Micro, STM. Good looking chart here, Scott. Just kind of going in a sideways direction near highs. Would like to see it break above, but the longer it holds, just the better, I think. Big winner as it's heavily involved in the EV space.
That would explain the strength. I mean, it looks great. I look at this monthly chart, and it looks really nice. I definitely think this is one to do a little bit more research on and consider buying on some pullbacks for STM.
All right, and then Valero, VLO. I believe you were mentioning it earlier, and I like this chart as a breakout.
Yeah, just nobody. Again, this almost reminds me of the Zoom chart where I mentioned earlier this week. I was like, you know what? No one's talking about Zoom, and its stock is doing absolutely nothing. And I felt like it was going to be breaking out or breaking down sometime soon. Got my alert over the 400 mark today, and it just went to the upside. But Valero is not obviously as volatile as Zoom is. But the chart is just going sideways, and when everyone talks energy, they just seem to be leaving out these key refiners, at least in my little group of people that I talk to.
Yeah.
But it's definitely a nice looking chart. It's getting back. It got back above all the key moving averages lately. It rallied off the 50 and the 200 just last week or earlier in the week, and starting to just edge a little higher here. So I like it.
All right, moving on to Thursday night, nearly at the end of the week here. Skyworks, I've talked about this one, just briefly mentioned it in my when I was looking at my focus portfolio or in my swing portfolio. Still long this one. Arguably the best earnings report we've seen, and stock popped on it and it's holding those gains. So I'm perfectly content with holding
Yeah,
it.
all-time new highs. Looks great after a couple months consolidation. I mean, just ride that trend higher above the 50-day moving average and recent breakouts.
All right, we also had Mondelez here, MDLZ, that dipped down to a test of its 200-day moving average in reaction to earnings and holding it up here. So that's always a positive. I said at the time that I expected to continue in the 55 to 60 range. You can't collect a 2.23% dividend, so probably a safer play, but not sure if there's much of a trade here, Scott.
Yeah, I wouldn't say trading vehicle by any means. This is definitely put in the income portfolio, collect a dividend yield for a relatively slow-moving stock. It is right up against all-time highs around $60, so this consolidation is potentially good, especially if it continues to hold that 55 support area. But yeah, I think I do own it in one of my long-term portfolios somewhere. So
Yeah. Um, all right, Team Atlassian cloud computing play. I was a little shocked at how positive a reaction it saw here, and I know the IGV is doing well, so definitely feels like there's some money flowing into it because, in general, I would have thought inline guidance would have really smacked the company down given the valuations, but this one's rallied. However, it is seeing a little bit of resistance at 250.
yeah, that is correct. Good rising 50-day moving average. So when it plunged below it in January, it was very easy to snap things back because of the strength of the trend that was in play there. So short-term key supports around 220. A little stalling out there, like 250, like you said, Gav. But this is definitely a growth name that, if you look at a long-term monthly chart of this one, it's just had an absolutely stellar performance the last 3 to 4 years, and you just want to look for those dips in context of that trend to keep buying.
All right, then we got Visa. We talked about the MasterCard chart, and Visa looks pretty similar.
Yeah, exactly. There's strong multi-year uptrends, although the stocks recently, over the last couple of months, have gotten very, very choppy, and now they're kind of in no man's land. So it's just a matter of time to see how they're going to play out. Are they going to continue breaking out to new highs, or are they just going to continue to chop, or are they eventually going to just lead the way to the downside if the market corrects?
All right, and then final day, name from Thursday was Western Digital. Scott and I were talking about the breakout potential in this WDC, and lo and behold, we got the breakout. Now it's running up to that 60 area. This looks great here, I think.
Yeah, WDC Micron was the leader that we talked about the last few months. It broke out back in early November from a really clean base above that 55 area. We said to keep WDC on the radar at the same time, getting back above the 200-day moving average. STX is the other one. It was lagging a little bit. I think at the time it did catch up, and then it recently STX has been the hot one with its earnings report. So basically, my point being is that the group has been very strong. We've told people that the charts look great the last 2 or 3 months. And yeah, I think on a bigger picture basis, it looks like it's stolen out here around $60 a little bit, but it does look like the group is strong. And I love when I get, strong sector, strong industry, and strong peers all moving to the upside, because it just gives you that extra confidence to be on that right side of that move.
All right, and then taking a quick look at the Monday or the Friday morning ones. Chevron CVX, I still view this as the best energy play out there, and it's just kind of trending along its 200 days. So I'm not really too nervous on Chevron here. I think this should continue, probably trading in a sideways direction, but paying a decent dividend here, and I think just a safe play.
Yeah, it's ranging the last 2.5 months right along the 200. So it's trapped between 85 and 95. Not too much going on there. I would be a little nervous because I do think that there's might be some other picks that are a little bit better. Just quickly looking at the ETFs, XLE, XOP, and OIH. So Chevron's not really matching those patterns. It seems to be kind of just trading its own little world there. ExxonMobil seems a little stronger at the time, and then ConocoPhillips. So. Yeah, I mean, it's fundamentally it's probably their guess. I'll take your word for it. So just look to buy the dips along that recent support levels. 85 is the one that's in play right now. If it struggles, you have gap support between that 80 and 75 area to watch.
All right, Honeywell out that day as well. Just taking a quick look at HON. Little nervous on this chart. It's down below the 50, but it did bounce off 195. It's back above the 200, but some resistance up above at 207. So don't love Honeywell.
Yeah, it broke out in November to all-time highs over that 180-ish area, and just got a little bit too far ahead of itself, so it's just going sideways. Obviously, underneath the 50 and 20 days does put a little bit of the momentum, at bay. But it is holding on to those gains, those gap up gains still above 195, 190 area. So it just seems like it needs a little bit more time to consolidate, maybe have some the 200-day moving average to rise up to meet price a little bit, and then maybe get moving to the upside. But looks okay for now.
All right. We also had Colgate-Palmolive, CL. Not the most exciting name here. It is lifting off the 200 though. This is another one that I put in as the as an income stock.
I agree 100%. And actually, I do like it technically a lot. The reason being it did break out above 75 resistance, which is the long-term multi-year resistance that was in play for this stock from 2015 to 2020. So you do have a little bit of a pullback going on here. So as long as it maintains support around 75, which I believe is well, the 200-day moving average is 77, but if you can let it slide a little bit if you're more of an investor, if it continues to hold above 75 on the long-term chart, it's totally worthwhile putting into the income portfolio.
All right. Let's see. Caterpillar was out that day. I was talking about Caterpillar earlier. I remained long. It came down to test the 50-day post. It was tested a 50-day when it reported earnings. It's lifted off there. I'm expecting a test of the 200 psych.
Really strong multi-year uptrend, all-time new highs. I agree, Gav. It looks really good here above a rising 50-day moving average. Is it worth slowing down a little bit? Yeah, it's a possibility. I think Deere has actually been one of the stronger stocks there. And Caterpillar's been a little bit of a laggard behind it. So a little concern going on there in that regard to maybe staying behind one of its peers. But 180 right now, 180, 175, those look like the key support zone that I'd be paying attention to. That would also be a broken downtrend on a monthly time frame, break down below the 50-day moving averages. So I'd give that zone 175, 180 as key support to monitor going forward.
All right, and finally, SAP, the German software provider. Some disappointing results overall, I felt. The stock was able to hold above the 50. This got crushed a quarter ago when it posted horrible results that dropped below the 200, but still remains below the 200. But it does seem like it's creeping up and finding a little bit more interest, probably due to the weaker valuation, given how badly it got sold off on Q3 results. So, any thoughts on SAP here, Scott?
It's a laggard for sure, below the 200-day moving average, giving up all those gains that it had over 140 from last summer. So it just needs to prove itself. For me, it needs to get back above that 140 area to really you get some upside trending action. I'm sure there could be a valuation down here at lower levels, or maybe it's just the rising tide lifts all boat mentality that's saving this stock from plunging lower. So I think the real test would be to watch this one during heavy distribution days in the market. If it's leading to the downside, it's definitely going to be a concern for buyers. But overall, like I said, it needs to really kind of get things moving back above 140.
Okay. We got about 5 minutes left to the bell, Scott. Maybe we just answer a few feedback questions here to finish it off. We'll catch up. We're up now through the end of January, coming into the February results. So, Monday of next week will be a perfect time to go over the first week of February. But first question and feedback. Blue X, are you holding your day trading overstock over the weekend?
It was an add-on. It wasn't a day trade. Okay. So, yeah, I've been swing long this one since 64, 65 area on the breakout from late January. This was not a full-size position. This was a little bit of an add-on because it had an inside bar yesterday after the thrust higher on Wednesday. It made the attempt to break out again. I think it has a very high short interest. It's got momentum at its back right now. I do have a I do have a hedge on the SPY right now, so again, this is kind of helping me put on a little bit more position on this name here. I have the SPY hedge, so if it does come out back in and stops us out on Monday, ideally the SPY will also help offset that to various degrees. So, yeah, I'm holding on to it for now.
All right. Let's see. Have we discussed Zoom? We did not discuss Zoom just yet.
Yeah, I did not participate in this one. I wanted to. I got a little sidetracked here today. I was hoping that we'd get a little bit more of a pullback this morning at around 105 for 400. It just didn't happen. It just really took off from like 390 straight up to 415 and then went into consolidation mode, drifting a little higher here this afternoon. I think it looks great on a monthly time frame, looks great on a weekly time frame. It's breaking a 3-4 month downtrend line. I think earnings don't come out till March. got above this resistance, squeezing above 50-day moving averages. I think you got to keep this one back on the radar. I think it's coming back into play. If you started a small position today, then kudos to you. It looks great above today's lows. I'm going to be watching this one next week just to see if it pulls back in a little bit, and then maybe I can get in when the dust settles a little bit. Things are quiet of somewhere around the 400 area.
All right. Next up, we got QS and GOEV. For my personal point, I love QS, but I'm not buying this until it gets down closer to 30 personally.
Yeah, we had a nice trade in this one this week. Got long at 45, and then we sold some out yesterday on the test of 50, so that was a nice clean break there. Goldman came out today and initiated a price target of 42 on it, so obviously just took the wind out of the sails on that one. And but we warned about this because we said, look at the chart. This is don't expect this chart to be back at 130 anytime soon. You get these sort of parabolic run-ups and then they break down and collapse. They tend to, grind, and they can even possibly go even much, much lower and shake out a lot of the long-term hopium people who are in the stock thinking it's going to get back to 130 sometime soon. So yeah, I'm still swing long a piece of it right now, but I didn't take much to begin with, so I am giving it a little bit more wiggle room here around 45. If it comes around weaker on Monday, then I'll just salvage what I can, maybe scratch it out if I have to. As for GOEV, Scalp Trader and I are both involved in this one. I got in here around the $18 area. I don't know exactly where he got in. You probably had a much better price than I did. But yeah, it's a swing long play. It's down today. It looks okay. It's fine. If you recall, I mentioned that I like this name on a weekly time frame. That's why I took the trade. It was breaking out above prior weeks resistance at that $17 and $18 area. And as a swing trader on a position like this, you should be looking at the weekly charts and not be concerned about the daily activity and the noise that's going on. Trade your time frames. I tell this to a lot of newbie traders. If you're a scalper, you should be trading the intraday short-term time frames for the most part. Same with the day traders, but as a day trader, you should also be focusing on the daily charts. If you are a swing trader planning on holding stocks for multiple days, perhaps even weeks, you should be focusing on the weekly time frames. And if you're a investor and you're not looking at a monthly chart, well, then you're just doing yourself a disservice.
All right. Let's see. Hold on a second. Enphase. Scott, being asked about that chart. Looks like it's setting up for me for a sideways direction in that 180 to 210 range. You got any thoughts on Enphase?
One of the strongest solar sector stocks out there. Just crazy momentum over 2020. It looks due for a basing phase, which seems to be in play here above a rising 50-day moving average. That's pretty much it. As long as it keeps that strength above the 50-day moving average short term, I'd be looking to buy some dips on this thing. Yeah.
Yeah. Okay. Let's see. Being asked about Deutsche Bank, I'd given some of my thoughts earlier. I should have taken some off at 12 here, but for now, I'm perfectly content with holding it. I think that the 10 level is going to hold some really staunch support, and we got that 200 moving up from that 958 area. So I'm going to remain long it. I think some of the weak economic data out of Germany's hit as of late, but I'm expecting rates to go higher in Europe as well as in the U.S. here, and I think that the banks will remain a pretty steady play in 2021. So I'm holding on to my Deutsche Bank. Somebody pointed out, Scott, LXFR. I'll probably take a closer look at this one over the weekend, but they do hydrogen tanks for cars and trucks. Nice breakout here.
Yeah, never heard of this one, but yeah, breaking out.
Yeah. All right. Well, I think that's going to do it for us here. I'll talk to Scott offline. We are going to look to get this recording up onto the site, so please be on the lookout for that. And I'll probably get on early Monday and do a run through and a look ahead at the week ahead, since we didn't have a chance to go through and do that. But Scott, you got anything to add before we close out here?
No, nothing going on there. Looks like the market just kind of petered out here this afternoon into the weekend, like we suspected that it would. Um, I wasn't really too active today, except for that short in Qualcomm, which I'm still holding. Didn't see any reason to get out of that short, given the fact that nobody's buying above opening ranges here the last 2 days. Um, what else? I got this. I had to get short some SPY today, as I said, as a hedge. Um, yeah, I don't really see too much going on there. Palantir was strong today. I thought about adding to the position a little bit. It looks pretty good, but the volatility is so high in this one lately. I prefer for it to settle down just a little bit before I start adding to that position. Maybe it doesn't look. You look at this Palantir on a like a weekly time frame, and it's very sloppy. It's still inside of the prior week's activity and stuff. So I'd rather add on a better looking pattern on for that from that swing trading perspective. But overall, market's pretty strong here. I'm still in that camp that maybe we go into a sideways range as we head into mid-February. I'm a little concerned about the fact that I'm so heavily weighted on the long side of things. So I feel like I'm going to just try to slow things down a little bit, play a little defense. So we'll see.
Yeah. All right. Well, with that, then, everybody have a great weekend. Scott, you have a great weekend yourself. Enjoy the
Hmm.
Super Bowl. And we'll be talking
Yep.
to everybody soon enough on Monday. So
All right,
take
sounds
care. And
good.
all right. Everyone have a good one.